Level 1. The tip. You are 27, equity research analyst, mid-tier bank, New York, salary $114,000. Your parents are impressed. You stop being impressed when rent is $3,400 for a studio, where the kitchen is the hallway. You cover healthcare. You read 10Ks faster than most people read emails. You know which biotechs bleed cash, which CEOs sell better than they develop drugs, which pipelines are real. You are good at this. That is the problem. Being good means you see how much money moves through this building and how little reaches your floor. Your MD makes $2.1 million last year. You see his comp memo on his screen. He steps out for a call. You are not supposed to see it. You do. That number stays in your head. It does not leave. One evening, a business school friend calls. M&A lawyer. 3 drinks in. He says a name, a company you cover. They are getting acquired. Next week, he says it fast, like speed makes it weigh less. You hang up, open Bloomberg, stock price, $34.20. Acquisition premium puts it at $45, maybe $48. You run the math 3 times, not to check the numbers, to decide what kind of person you are. Next morning, new brokerage account, not your main one. Compliance does not know it exists. You deposit $40,000. Almost everything you have, 1,170 shares, $34.18. Thursday comes, deal announced. Stock opens at $46.70. You sell before lunch. Profit after tax, $14,200. That is how it starts. Not millions, not a master plan, a drunk friend, and a savings account. First rule, it never feels like a crime. It feels like being smart. Level 2, the system. You are 29, salary $135,000. The hidden account, $127,000. That number grows faster than any raise ever will. The first trade teaches you something better than money: how not to get caught. The SEC watches 3 things: unusual volume before announcements, connections between trader and source, patterns. First 2 are manageable. Third one kills people. You eliminate the pattern. Your college roommate's cousin lives in Toronto. He opens a Canadian brokerage account. You wire money through a consulting payment. He places trades. You split 70 to 30. He thinks he is helping a friend. He has no idea what he is doing, by design. You never act on every tip. You hear something useful every 2 months. You trade every 4. The gaps are camouflage. No pattern, no flag. Position sizes stay under $200,000. You do not trust thresholds. You trust margins of safety. The same principle you use in stock analysis, you now apply to federal crime. The irony is not lost on you. Second trade, $41,000 profit. A pharma company announces positive phase 3 results. You know 3 days early. A contact mentions enrollment numbers that do not match public data. You do not ask, you notice. Second rule, the best information never feels like a secret. It feels like observation. You check your phone less, not more. Paranoia never arrives. Something colder replaces it. Vigilance. You notice exits in every room. You count cameras. You read compliance memos the way a locksmith reads a lock. Not to respect it, to measure it. Level 3, the network. You are 32, hedge fund, 11 people, $1.6 billion under management. Base, $220,000. Your performance is exceptional. Your PM never fully understands why. The network builds itself. You do not recruit, gravity does. People sense it. The way you talk about positions. The confidence that does not come from models alone. The way you are never surprised by announcements. A corporate lawyer at a charity dinner becomes a source. He does not know he is a source. He thinks he is networking. He drops deal names the way lawyers do when they want to sound important. You listen. You remember everything. You trade on a third of it. A pharma executive you golf with calls for stock tips. He does not realize the tips are trades. He gives you pipeline intel. You give him competitor analysis. It is a conversation, except it is not. Hidden account, $780,000. Inside a Delaware LLC owned by a South Dakota trust. The trust's beneficiary is a charitable entity that has never made a donation. That entity holds a Cayman Islands brokerage account, 3 layers, each one legal on its own. Together, they are architecture. You think about the SEC the way a pilot thinks about turbulence. Real, out there, planned for, unfelt. Third rule, the network is the product. Every node is also a liability. Your law school friend calls, the one who started everything. His voice is different. His firm is under review. He asks if you ever did anything with that thing from a few years back. You say you do not know what he is talking about. Your tone ends the conversation permanently. He does not call again. You feel nothing about this. That is new. Level 4, the big score. You are 35. Portfolio manager, $340 million of the fund's capital. Your public track record is top decile. Real research, real conviction. That part is genuine. The other part makes genuine a little more predictable. The score arrives as a dinner. Private room, Greenwich. A board member of a Fortune 200 tech company sits across from you. He is considering your fund's advisory board. The conversation is broad. Then one sentence changes everything. His company is acquiring a European competitor, not public. 6 weeks from announcement. The premium is significant. He tells you because at this level, information does not move through tips. It moves through trust. He trusts you because you manage $340 million. Information is not a gift. It is currency between people inside the same architecture. You wait 9 days, long enough to separate the trade from the dinner, short enough that the intel is still exclusive. $1.8 million position, 3 layers, routed through a Singapore broker-dealer. Your LLC retains 8 months ago for exactly this moment. Deal announced. Stock jumps 38%. You close over 5 days, slowly. Way someone with nothing to hide sells stock. Net profit, $680,000. You wire $40,000 to your parents. Good quarter, you tell them. Your mother says she is proud. Father asks if you are eating enough. You hang up, stare at a number on a screen. That number is the exact distance between who you are and who they think you are. 4th rule. The money stops being the point 2 levels ago. The point is that you can, and nobody knows. Level 5, the investigation. You are 38. Fund returns 26% last year. Comp, $1.4 million. Payment account, $3.1 million. Total net worth, just under $7 million. You are rich, not the kind that changes how people treat you, the kind that changes how you treat risk. Your compliance officer calls, routine check, nothing specific. He asks about a trade from 7 months ago. He asks the way people ask when they already have an answer and want to see if yours matches. You reference your research notes. They are real. You write them the night before the trade, backdated on purpose, written to justify a decision you already make for reasons that never appear on paper. He thanks you, hangs up. Your hands are steady. Your heartbeat is not. You spend the next week auditing yourself. The LLC, the trust, Cayman account, every connection point. You search for your own footprints the way a forensic investigator does. You find one thing: a wire moves through a bank your Singapore broker uses without authorization. The bank is flagged by FinCEN. Not your activity, someone else's, but the bank is on a list. Lists generate other lists. You kill the Singapore relationship in 48 hours. Reroute through Liechtenstein. Clean compliance record. Liechtenstein builds its entire economy on making compliance records clean. 3 months pass. Nothing. No subpoena. No second call. No SEC letter. Nothing. The relief never comes. Investigation does not need to find you to change you. Possibility is the punishment. You carry it now. Every room, every dinner. Every time someone says regulatory, your pulse shifts by 2 beats. 5th rule. You never know if they are not watching. You only know they have not come yet. Level 6, the cost. You are 43. Founding partner. Your fund, $2.2 billion. Your name is in the press. You sit on panels. Your legitimate record is exceptional. The architecture still operates smaller, less frequent, not because you need money, because stopping means admitting the foundation is not clean. Everything sits on that foundation. 11 months since the last trade. Longest gap since it starts. Tell yourself you stop. You do not stop. You pause. You know the difference. Your wife asks why you check your phone at 3 a.m. You say Asian markets. She believes you. She always believes you. That costs the most. Not prison, not the SEC. The person who trusts you most trusts a version of you that does not fully exist. Your daughter is 11. School project on stock markets. She asks you to explain trading. You give the textbook answer. Supply and demand. Public information. Efficient markets. You lie to your daughter about what you do for a living. You do it fluently. That night you sit in your home office for 2 hours. You do not work. You do not check anything. You just sit. Cayman account, $4.8 million. Legitimate net worth, $22 million. Combined, you are worth more than your entire family earns across 3 generations. There is no one alive you can tell. 3 people, no fragments. Nobody holds the full picture. You design it that way. Compartmentalization. Intelligence agencies use the same principle. You apply it to your marriage, your friendships. Every relationship is a controlled information environment. 6th rule. The system works perfectly. That is the problem. You are the only person living inside the full truth of your life. That is solitary confinement without walls. Level 7. The verdict. You are 51, advisory role, equity stake pays $3.4 million a year for almost nothing. The architecture is gone. Dismantled 2 years ago. Cayman account closed. Delaware LLC dissolved. South Dakota trust expired. Money moves through 4 jurisdictions over 7 months into clean accounts. Nobody asks. Nobody will. You sit on a nonprofit board. Financial literacy for underprivileged students. The irony is surgical. You teach young people how markets work. Version with rules. The version with consequences. The version you stop believing at 27. Net worth, $41 million. House in Connecticut. Apartment in the city. College fund that covers any school on earth. Wife planning Portugal. Every external measure says your life is exceptional. There is a sealed room in your mind. 24 years of decisions the world calls brilliant timing, exceptional instinct, a gift for reading markets. You accept the credit. Every time someone introduces you as one of the best investors of his generation, you smile. Say thank you. You do not correct the record. You never get caught. SEC never calls. FBI never knocks. No journalist connects the dots. No source trades testimony for leniency. Every layer holds. Every trail dissolves. You win. Some nights, in the house that successful investing builds, you lie awake. You wonder if winning is the worst outcome. Getting caught ends it. A sentence, a debt paid, a version of done. You do not have done. You have a life where the thing that defines you most is the thing no one ever knows. 7th rule. There is no outside perspective anymore, only the ledger, and the ledger never balances. Not because the numbers are wrong, because some entries are never meant to be recorded. The cycle. Somewhere in Midtown, a restaurant with too much noise and not enough light. A 27-year-old equity analyst has dinner with a law school friend. The friend has 3 drinks. He leans in, mentions a company, says something about an acquisition. Fast, casual. The analyst listens, does not react, asks one follow-up question, phrased carefully enough to sound like curiosity instead of intent. He goes home, opens his laptop, looks at the price, runs the math, runs it again. He is deciding what kind of person he is. He tells himself it is not a crime, just information he happens to have. Everyone has information. The difference is what you do with it. He opens a browser tab, types the name of a brokerage, starts the application. The ledger never closes. It just turns to a new page.